G'day, Jarrad Mahon here, bringing you my latest Perth property update. I'm going to cover off the rental and the sale market for you, as well as some observations on where the best opportunities in this market are. You can see the number of properties for sale since April steadily been increasing, and that was the point that our federal election was announced. So you can imagine the uncertainty didn't help. Over that time, a lot of our Perth economy's slowed down, the mining's been slowing down, and where's hardest hit has been in the Perth CBD. Property sale prices have been pulling back. It's certainly transitioning from a seller's market into a neutral market now as we speak. And as we've got that election out of the way, we did have a pulling back in the number of properties for sale in October. That was a good sign that the market's getting a bit more confidence in it. But then coming into November, we've seen quite a steady rise in the number of properties for sale. That's usually can be a bit of a seasonal change when a lot of people take their properties to the market in spring to take advantage of that extra activity in the market. But our number of sales hasn't peaked up as much as I would have expected it to. So it's seen the number of properties for sale spike to the largest number that we've had on the market in this entire year. So that's quite notable. What I expect to happen as we go into Christmas is the number of properties will stop coming on the market. We won't get any new listings for sale. Some of the existing stock will meet the market, price revise and clear off, and we'll probably start January with about 8,000 listings. That's typically what happens. We get everyone thinking of bringing their property on the market. We'll hold off until about the second to third week of January when we'll start seeing them come back on. So it's going to be really interesting to see where our market supply and demand wise rebounds to going into February, and I'll be keeping a close eye on that. Looking at the number of properties for sale, you can see it has been trending down ever so gradually, and that shows that our market is slowly but surely softening, and I'm keeping a good eye on that. We're still generally in a seller's market in the middle ring suburbs of Perth, heading to a neutral market in the inner CBD, and in the outer suburbs of Perth where we're a bit more affected by affordability. Some of those suburbs are in a seller's market and others are moving back towards more of a neutral market as well. On the rental side, what we're seeing is that the market is now stabilising at that 3.1% vacancy. We reached quite a peak of vacancy, so our peak of properties available for rent in July, and that's probably a bit of a seasonal aspect too, with winter being a bit more of a gloomier month for rental market. But we've really stabilised at that 3.1%, so that's a good sign to see. But for any of the landlords that haven't had their property come up for releasing in the last 6 months, they're getting a little bit of a shock with rents having pulled back $10, $20, and in the inner Perth areas rents have come back as much as $50 to $100. Now, I'm not overly worried about rents coming back as much in the inner Perth because they were actually at an unsustainable rental yield. Investors were on a good wicket for a while. They were getting 6.5%, 7% for an unfurnished property. They're now pulling back to the more 5 to 5.5% that we're seeing in the middle ring suburbs. So the middle ring suburbs didn't overshoot, but the Perth CBD did, and now it's correcting back down. On the median rent side, you can see that we also hit our peak of $480 per week in July, and that rent is now seeming to come back to its longer term average at $470 and just stabilising. So I expect that we're just going to hold tight, trend sideways for a while on the rental market, keep an eye on whether this overall softening trend continues in the sale market. There's still plenty of time to get growth in areas. The one area of the market, one segment of the market that we are seeing an increase in demand in is the first home buyers new property segment. So when the grant changed in October, it became $10,000 for new properties for first home buyers, And so that's led to a surge in the outer area land estates where you can buy house and land packages, and the inner areas where you can buy infill villas and townhouses. So anything up to that 500,000 price point where they still don't have to pay stamp duty, that's where, in the 450 to 500, that's where it's hottest in across Perth for new properties. And we're already seeing the waiting time for titles in these outer areas draw out. And I'm keeping a real close eye on it. We've got some investors also buying house and land packages over the last month or two in those areas, because we are going to get a flow-on effect. When title time drags out, that means that there's more demand building up for the next title release, and the developers put a bit of extra price in there, so that carries forward, adds to the overall price. Builders start feeling the pressure because they've got people lining up to build with them. Can they get trades? They're still grappling and getting some back from the mines, but I am told that things are pretty tight for the builders, getting availability of brickies and getting enough trades to get properties built in a reasonable time is still, it's not easy going for them. So what I expect to, in some of the more popular estates, in Harrisdale, in Wandie, we're seeing titles not available till March next year, so a 4-month wait already. Can it get any longer to wait for titles? It seems that people are prepared to wait for these popular estates, and when they come on, I can bet there'll be a bit of a price increase on the last stage for them. So if you do want a house and land package, I've got some great relationships with developers, and I can get you either a fall-over block in stages that have sold, or a block in an upcoming stage we can get first dibs. And in the inner areas, we've got access to off-the-plan and house and land packages. I expect the inner area, that type of property, to do very well over the next couple of years, because there's an intersection of both investors, downsizers and first home buyers, and the middle ring suburbs will probably have the most resilience as things slowly start to come back, because people have got good jobs in that market and they're a bit more resilient to changes in interest rates and in the economy. So that's an overall breakdown, what it's meant for our different sub-markets in Perth. And of course, if you have any questions relating to your situation, give me an email or a phone call, and I'm only too happy to help. Jarrad Mahon signing off for my Perth property update, and I hope you have an awesome Christmas ahead. I'm not going to see you before then. Make sure you check out our staff performance video. Had a lot of fun whipping that together, and can't wait to see you in the new year.